All right, welcome to another session of the My Solo 401k Financial Daily Webinar Series. Happy 2026. We're excited to get started. Back for another year of great Solo 401k content. If you have questions or topics you wish to discuss, please go ahead and chat that over now so that we can be sure to get to all the questions. Again, welcome to your daily Solo 401k webinar and Q&A session with My Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic: open solo 401k in 2026 for a retroactive 2025 Mega Backdoor Roth. This is your chance to get answers. Please use the chat now to ask questions on today's topic or anything else. Again, chat them over now so that we can be sure to get to them all. Let's get started. So as always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So again, we want to talk about how it's still possible, it's still plenty of time, as a matter of fact, to open up a new solo 401k plan in 2026, be able to fund it for 2025 by making Mega Backdoor Roth solo 401k contributions. So we want to break that down, how that works, etc. As we go through the slides, if the information is helping you feel more confident about your future, please take 1 second to like and subscribe. Liking is going to tell the platform that the content is valuable, whether you're on LinkedIn, YouTube, X, Instagram, etc. So if you can like the stream, that would be fantastic. That'll help us to get the word out to other solopreneurs like you who might be looking to catch up on their retirement savings. So please help your fellow solopreneur out, help us out to get the word out. We really appreciate that. We also invite you to subscribe to our channels. Again, whether you're on LinkedIn, YouTube, X, Instagram, etc., as that way you'll get notifications of when we go live. So you get notifications of all of our crucial content. For example, we were live earlier today. This is our second session. We generally host 2 sessions a day. So we come live every day. We come with content every day to help you secure your retirement. Now, we do have an initial question here. We'll go ahead and knock that out from Cody. Cody asks, I'm looking to roll my previous 401k plan over from my employer 401k plan. I am a 1099 now. I was wondering how long it would take to get the loan funded once I reach out to my previous 401k provider. That's a wonderful scenario that you present, Cody. Thank you so much for bringing the good question. There's a lot of solopreneurs just like you who want to be able to borrow from their solo 401k. So that's one of the top features of our plan. And so you can definitely use our plan in order to be able to take a 401k loan. That's where you literally withdraw the funds from your own solo 401k account. You can then use those funds for any purpose whatsoever. It could be a personal purpose, could be a business purpose. Now, regardless of what you use the funds for, they need to be paid back to your 401k according to the payment schedule. So you can take the money out and it's not going to be subject to taxes or penalties, provided that it's, number one, documented as a loan, and then number two, paid back according to the payment schedule. So those terms are going to require that you're limited to borrowing no more than 50% of the balance, not to exceed $50,000. It needs to be paid back in either monthly or quarterly payments. It's up to you. Equal payments of principal and interest. The interest is prime plus 1%, or it could be a CD rate plus 2%, with those payments spread over a 5-year term. Now, the question becomes, how are you going to fund it? Well, in Cody's case, it sounds like you have money that's in a former employer plan. So if somebody's eligible to set up a solo 401k, so they're reporting earned self-employment income with no non-owner, non-spouse, full-time W-2 employees, so no W-2 employees working for any business owned by that person or a spouse, if any, they're eligible to set up a solo 401k. Now they're going to have to choose a solo 401k plan from a provider like my solo 401k that supports 401k loans. So your basic vanilla brokerage plans like at Fidelity and Schwab, they don't allow for 401k loans, but our plan does. And so moreover, you can roll money over from a former employer plan to your solo 401k. So if you're eligible and you set up a plan like the one offered by my solo 401k Financial, you can roll money over from your former employer plan to the solo 401k. And as soon as the funds hit, you can take a loan right away. We prepare the required loan documents as part of our service. We do that within 1 business day. So you just submit a form on our website to give us the information we need. Then that prompts us to prepare the loan documents, which we do that within 1 business day. You could literally wire the money out of your solo 401k account to your personal account to fund that loan. As long as you roll over at least $100,000, or you otherwise have $100,000 in your solo 401k, you can take a full $50,000 loan. Again, you can use it for any purpose whatsoever, whether a personal purpose or a business purpose. And it just needs to be paid back according to that loan payment schedule. Again, monthly or quarterly payments, equal payments of principal and interest. The interest is going to be prime plus 1% or a CD rate plus 2% with those payments spread over a 5-year term. Now, as far as the timing to roll over the money from a former employer plan, that's going to vary. Different factors include whether or not or how long it's been since you left your former employer plan. So if someone just recently left their former employer plan, you're not going to be able to initiate the transfer, just practically speaking, and until the system's been updated to show that you're a former employee, right? And that's going to be after your last paycheck, et cetera, et cetera. So you might put your notice in, but you might not get your last paycheck until a month, right? And then it might take a few more weeks before the system's updated. So there could be a practical consideration if you just recently left your job. Now, we have tremendous experience. We provide tremendous support to our customers in helping them transfer money from a former employer plan. As you might imagine, the process will vary whether you're transferring money from a former employer plan at Fidelity versus a former employer plan somewhere else, maybe at Schwab. Sometimes it's an online process. Sometimes it's a paper process. Sometimes it's a telephone process. And what we've done is we've tracked our experience. We've been in business since 2009 as a company. So for many, many years, helping thousands and thousands of customers, we've tracked our experience in helping customers transfer funds in our knowledge base. So we can tap that knowledge source of information to make the process easier for you. So we'll typically just ask for a recent account statement just to really verify exactly what you have, because the process can vary even based on the different account type that you have. And then we'll help you with that transfer process, whether it's an online process, a telephone process, a paper process. And what will happen is that those funds will transfer by check. That's virtually almost always the way that the funds transfer, by check. So that's the biggest time factor, because you got time for the check to come in the mail, time for the check to clear. So while you are establishing the solo 401k plan with us, while you're signing up with us, we'll be helping you open up an account at the bank or brokerage of choice. While that is happening, we can be also on a parallel path helping you with the rollover process from your former employer plan, so that by the time you receive that check in the mail, ideally you've already got your account set up, say at Fidelity or Schwab or a bank, where you can deposit a check into that account. And then once the check clears, you can immediately take a loan. There's no more waiting period. As soon as the money is in there, you can take a loan right away. How do you think the timeline for that would look if I'm just calling today to roll over my current 401k? I know they'll send me a check, and then I have to fund the account and then have to start the process. So if it's your current employer plan, you're typically not going to be able to transfer the funds out unless you're over age 59 and a half, or if the money that you want to transfer out is money that you previously rolled in from a former employer plan. So if it's your current employer plan, it would be wise to contact the number on your statement. So to contact the administrator, and you could just ask them a simple question: can I roll over my money to an IRA? If they tell you no because you're still an employee, there's your answer. You're not going to be able to transfer the money from your current employer plan. Because again, you typically can't transfer money from a current employer plan. You typically have to wait until you've separated from service. So you've quit, for example. Then there's going to be an additional waiting period while you get your last paycheck and they update the system to show that you're now a former employee. But if you're moving money from a former employer plan, it's typically going to take, I would say, at least a couple weeks for them to cut the check, for the check to come in the mail, and for the check to clear into your solo 401k account. The issue is if they wire the money, then which sometimes clients will work with their former employer plan provider and they may try to accommodate you and wire the money, but that creates a compliance pitfall because oftentimes when you wire money from your former employer plan, they end up reporting that as a taxable distribution because they have to tell the IRS when you transfer the money out. So so if they end up telling the IRS that it's a taxable distribution, obviously that's going to create a problem that you're going to have to resolve. You're going to have to explain that to the IRS because otherwise the IRS is going to think that you took a taxable distribution and that you didn't report that as income on your taxes. That's why it makes sense to work with us because then we will leverage our knowledge base to make sure that we follow the proven process so that the former employer plan provider understands that it's not a taxable distribution and that it's a non-taxable rollover to your new employer plan. Now, sometimes they will still make a mistake when you do the reporting, but that's where the check can be helpful because now you have that check showing that the funds were actually rolled over to your new employer plan. So you can go back to the administrator if they end up misreporting as a taxable distribution and get them to correct that. Hopefully that makes sense. Most definitely, if you go to mysolo401k.net/book, you can most definitely grab a time. Just choose Solo 401k, and we'd be happy to discuss it with you. Thank you so much for coming on today's session, Cody, and don't hesitate to ask additional questions. So we'll turn to the slides we wanted to share. Again, regarding the topic of being able to open up a solo 401k in 2026 and still being able to make 2025 Mega Backdoor Roth contributions. So let's first lay the foundation. Who's eligible to set up a solo 401k? Well, it's for an owner-only business with no full-time W-2 employees. So there's really two criteria. You must have self-employment income. That could be income reported on Schedule C, for example, in the case of a sole proprietor, or a single member LLC that's taxed as a sole proprietor. W-2 wages, for example, in the case of a business taxed as an S Corp or a C Corp, or income reported on line 14 of a K-1 in the case of a business taxed as a partnership that files a Form 1065 partnership tax return. The other part of the eligibility criteria is that you cannot have any non-owner, non-spouse, full-time W-2 employees. So your spouse could be working in the business as a W-2 employee, and that would not preclude that business from setting up a solo 401k as long as there's no other full-time W-2 employees. You could also have a business partner who's at least a 3% or more business partner that's working in the business, and that would not prevent the business from setting up an owner-only plan. So ultimately, a solo 401k is ideal for consultants, for realtors, for freelancers, and other small business owners. A solo 401k eligibility checklist. So this includes some of the top eligibility considerations that folks ask about when they're considering setting up a solo 401k. Do I need a separate entity? The answer is no. We have many, many customers who operate as sole proprietors, and that's fine as long as they're reporting earned self-employment income. So you do need to report earned self-employment income on your taxes. Now, there is no minimum amount of earned self-employment income that you need to report, but of course, your ability to contribute to the plan is a function of your earned self-employment income. So if you don't have a relatively high amount of earned self-employment income, say when you're first setting it up, you may not be able to contribute very much, relatively speaking, but as your income grows, you can contribute more, etc. The other part of the eligibility criteria is, again, is that you cannot have any non-owner, non-spouse, full-time W-2 employees. So your spouse or business partner can participate as long as your spouse or business partner are reporting their own earned self-employment income. You could even have a solo 401k, even if you have a W-2 day job, even if you participate in your W-2 employer-sponsored plan, as long as you've got that separate earned self-employment income with no full-time W-2 employees working for any business owned by you or a spouse, if any. So now let's dive into the meat of the content that we wanted to share. So it's really a late start reality check, right? A lot of individuals signed up for the solo 401k on or before December 31st, 2025. And for those individuals, they would have preserved the ability to open up accounts and make contributions for 2025, all types of contributions for 2025 by their business tax return deadline, including any timely filed extension in 2026. But for those who didn't set up a solo 401k until 2026, the question becomes, well, can they still make 2025 contributions? And the answer is yes, to a degree. It depends. So if their business is taxed as a sole proprietorship, let's just say they don't have a legal entity, so it's just a true sole proprietorship, or it's a single member LLC, but that's taxed as a disregarded entity as a sole proprietorship. For those individuals, for those solopreneurs who are taxed as a sole proprietorship, they could still set up a plan in 2026 and make all types of solo 401k contributions for 2025. However, they would have to make the employee contribution by April 15th. Even if they filed an extension for their 1040, for their business tax return, which is their 1040 since they're taxed as a sole proprietorship, even if they file an extension for their 1040, that would not extend their ability to make employee contributions by October 15th. It would only extend the ability to make employer and voluntary after-tax contributions. But if your business is not taxed as a sole proprietorship, let's say it's taxed as an S Corp or a C Corp or a partnership, and you did not set up the plan by December 31st, 2025, well, then you lose out on the ability to make employee contributions for 2025, but you still have the chance to make employer or voluntary after-tax contributions. So you could make those retroactively for 2025. And voluntary after-tax contributions is really the way that you make Mega Backdoor Roth solo 401k contributions. So in short, you still have your full Mega Backdoor Roth contribution option on the table. You haven't lost it for 2025 because the way that you make Mega Backdoor Roth contributions is by making voluntary after-tax contributions. And it's possible to only make voluntary after-tax contributions, right? It's not a waterfall where you first have to make employee, then make employer before you can make voluntary after-tax contributions. You could skip those employee and employer and just make 100% voluntary after-tax contributions. And again, no December 31st, 2025 setup is required. You can contribute 100%, dollar for dollar, of your self-employment compensation up to the overall limit, which for 2025 is $70,000 as a voluntary after-tax contribution. You can make that contribution by your business tax return deadline, including any timely filed extension for 2025 here in 2026. Then you can transfer those voluntary after-tax solo 401k funds either to a Roth solo 401k or a Roth IRA, right? That's the second step of the Mega Backdoor Roth strategy. It's a two-step process. You are first taking advantage of the higher voluntary after-tax contribution limits. You're taking advantage of the fact that you can still set up a plan here in 2026 and make voluntary after-tax contributions for 2025, but you need to deposit those voluntary after-tax funds into a separate voluntary after-tax account. Then you're moving the money from the voluntary after-tax account to a Roth account. Could either be a Roth solo 401k or a Roth IRA. And the reason that you want to do that is so that now you can get that potential for tax-free growth. Because now, just like any other funds in a Roth account, they'll have that potential for tax-free growth where the subsequent gains right after you invest the funds. The subsequent gains are going to be tax free as long as when you withdraw the money, you do that as a qualified Roth withdrawal. Now, there is no deadline to move the money from the after tax account to the Roth account. The only deadline is to make the contribution, which has to be made by your 2025 self employed business tax return deadline, including any timely filed extension. So you just want to sign up now in 2026 to give yourself plenty of time to open up the voluntary after tax account and actually deposit that contribution. Now, that second step, when you move the money from the after tax solo 401k, either to a Roth solo 401k or Roth IRA, generally that's non taxable. We say generally because only if the gains were to accrue inside that after tax account before you move the money to the Roth account with those small gains portion, hopefully small, because typically most folks will move the funds from the after tax account to the Roth account shortly after they make the contribution so that they can avoid the gains and so they can start investing and have the potential for tax-free growth because they want to invest inside the Roth so you can have that tax-free growth potential. So the critical deadlines for 2026 or in 2026 for making those 2025 contributions is your business tax return deadline. So even if you didn't sign up for the plan for the solo 401k by the end of 2025, all is not lost. If your goal is to make Mega Backdoor Roth contributions, everything's still on the table. You just need to sign up in time to make those after-tax contributions by your business tax return deadline, including any timely filed extension. So for an S Corp or a partnership, that's March 16th, 2026, or if you file a timely extension, September 15th, 2026. For a C Corp and a sole proprietorship, that's April 15th, 2026, or if you file a timely extension, October 15th, 2026. So the after-tax scenario, the math. So the 2025 contribution limit is $70,000. And that's really the limit regardless of your age. Because even if you're 50 or older, yes, you're eligible to make catch-up contributions, but catch-up contributions are a type of employee contribution. So unless your business is taxed as a sole proprietorship, where you still could set up a plan here in 2026 and make employee contributions by April 15th. But if your business is not taxed as a sole proprietorship, let's say it's an S Corp, then it's too late to set up a plan and make employee contributions. So it's too late to set up a plan and make catch-up contributions for 2025, but there's still plenty of time to set up a plan and make voluntary after-tax contributions. And as I mentioned, it's not a waterfall. You can skip employee, you can skip employer, you can go straight to voluntary after-tax contributions, and you can contribute 100% dollar for dollar. So it's not a percentage. You can contribute 100% dollar for dollar of your self-employment compensation up to $70,000 for 2025, assuming you didn't make any other contributions to the plan, assuming you also didn't make any contributions to a 403b, if any. But you can contribute 100% then up to $70,000 for 2025. You could do that by your business tax return deadline, including any timely filed extension in 2026, and then move the money to your Roth account, either a Roth solo 401k, or you can move it to a Roth IRA. It could be a new Roth IRA or a pre-existing Roth IRA where you've got that potential for tax-free growth, just like any other money in a Roth account. So again, sign up early to allow time for plan documents and account setup. I mean, we're very fast. We prepare the documents to establish the plan within the same business day, and then we'll help you open up accounts at the bank or brokerage of choice. We're totally neutral as far as where the accounts are at. We don't hold or have access to any of our customers' funds. We're not giving investment advice, so we're super compatible, for example, for those that are working with advisors, because oftentimes your advisor may want a custody at a specific institution, whether it might be Fidelity Institutional, Altruist, Schwab Institutional, et cetera. We're totally neutral. But you do want to give yourself time to open up the accounts, to deposit the contributions, and then you can take your time to move the funds to either a Roth solo 401k or a Roth IRA. And then when you ultimately do move those funds to a Roth solo 401k or a Roth IRA, an important point is you want to go to our website to let us know about that after tax to Roth transfer. Why? Because that subsequent transfer from the voluntary after tax solo 401k to the Roth solo 401k or Roth IRA, that is reportable on a Form 1099-R. So the first step, remember, it's a two-step process. You first deposit the funds into the after-tax account when you're making that voluntary after-tax contribution. That is not reportable, regardless of how your business is taxed. Voluntary after-tax contributions do not need to be reported. But the second step, when you move the money from the voluntary after-tax account either to a Roth solo 401k or Roth IRA, that does need to be reported on a Form 1099-R. And we handle that. We do that for no additional charge. Customers just have to let us know, or their advisors let us know by submitting the form on our website. You can do it easily 24/7 on my solo401k.net/forms. Why voluntary after tax is different? Well, the limits are much higher, right? 10 times higher than what you could contribute to a Roth IRA, and multiple times higher than what you could contribute to a Roth solo 401k. So in our experience, many high income earners who may be starting after year end, who are very much focused on maximizing the funds in their Roth account, are attracted to the Mega Backdoor Roth. Maybe they might be relatively early in their career, so they have a lot of runway of potential growth in that Roth account. Again, potentially tax-free growth. So it can be a very powerful tool. It's definitely one of the top reasons customers sign up with us. Now, you need to work with a provider like my Solo 401k Financial, because you need to have plan documents that allow for those two steps that we discussed, the voluntary after-tax contribution and then the transfer to the Roth. It's also essential to work with a provider like my Solo 401k Financial that has deep experience in helping customers through this. We've helped thousands and thousands and thousands of customers. We were the first Solo 401k provider to offer a plan that supported the Mega Backdoor Roth. We also provide tremendous compliance support, such as the 1099-R. Now, other top features are we also provide other compliance support. So once the value of the plan exceeds $250,000, an informational tax filing will need to be filed for the Solo 401k. And the late fees can be very high, $250 per day. So the name of that informational tax form that would have to be filed is a Form 5500EZ. Customers just have to let us know, because again, we don't have access to the accounts. But customers or their advisors just let us know so we can add their plan to the queue to prepare the 5500EZ. We do that for no additional charge. We'll take them then through the 5500EZ filing process, where we end up filing it under the electronic filing system, the EFAS system, to make it easy for the customer, advisors, for all parties. Other top features are we were the first Solo 401k provider to offer a plan that was eligible for the tax credits. Now, this is not the startup tax credits. It's actually the auto contribution tax credits. So let's get that corrected. So it's the auto contribution tax credits, not the startup cost credits. So those are $500 per year for 3 consecutive years. Those are tax credits, not tax deductions. So that's going to be a dollar for dollar reduction in your tax liability. It's going to more than cover our fees for the first 7 years. We charge $650, which is the initial fee. Starting 12 months later, we charge our $125 annual fee that covers the second year. So it's a tremendous way to just alleviate the cost to set up and maintain a solo 401k, to give you access. So again, if this is helping you, please like this video, as it helps us to get the word out to other solopreneurs just like you who might be looking to catch up on their retirement savings. Additional top features are the ability to access alternative investments. So you can use the Solo 401k to invest in alternative investments. The ability to take a 401k loan, like we talked about at the outset with Cody. All right. So definitely the takeaway is just not to wait till the last minute so you can give yourself plenty of time to set up the accounts and make the contributions. You can sign up quickly and easily. We prepare the documents within the same business day at mysolo401k.net. Just click on open account, then click on solo 401k, get started. Just 10 simple questions. That's how we capture the information about you and your business. Straightforward information, such as your name, your address, the name of your business, what you want to name the plan. We recommend 2 words in the word trust. Once you submit that information and payment is made, we'll prepare the plan documents within the same business day. So you can act quickly and still make those 2025 Mega Backdoor Roth contributions. Can you have a Roth solo 401k with a C Corp? You can if you don't have any non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. So if you're reporting earned self-employment income, such as W-2 wages from your C Corp, and there's no full-time W-2 employees other than you, your spouse, another business partner who's at least a 3% or more business partner, then you could set up a solo 401k. And if you set up a solo 401k with my solo 401k financial, you're going to be able to use all the tools that are available under the rules to maximize dollars in your Roth solo 401k. So that's not just your typical Roth solo 401k contributions, but also the ability to make mega backdoor Roth contributions, the ability to make employer contributions as Roth contributions, the ability to do in-plan Roth conversions, where you convert money that's already in a pre-tax status in your retirement account over to a Roth status. Great question. Thank you so much for bringing it. Now, we do want to invite you to our community. We have the largest community of solo 401k owners, solo 401k investors, solo 401k advisors. We've got over 32,000 members. It's totally free to join. All are welcome. It's not just for customers. So please don't hesitate to join. All of that translates to a vibrant community. We've got vibrant forums. We have a library of videos and webinars. So there's a ton of ways to learn and to share the knowledge. So please don't hesitate to join. All right, that looks like that's taken us to the end of the session for today. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this solo 401k community. We'll be back here tomorrow with more crucial content to help you secure your retirement.